Hey everyone, good afternoon. It's Mike from Orderflows. And if you want to learn more about order flow, be sure to like and subscribe this channel. Today I'll be talking about, recognizing lows forming in the order flow and how you can take advantage of them. And, today in the bonds, there was an interesting little sell-off, then a rally. And, just really quick, if you're on NinjaTrader, here's a nice little free NinjaTrader hack. They have an actual indicator in NinjaTrader 8 to draw the low. So you just scroll down, you open up the indicators and you scroll down. It's called current open, high, low, close. Current day OHL, current open, high, low. We haven't closed yet, so it's just the current open, high, and lows. You just click on it, make sure it shows up in the configured, and just click apply, and it'll draw a red line for the low, a green line for the high for the day, and it's kind of like a yellow or goldenrod color for the opening price. So, it's just a great way to have a reference of where you're trading relative to the high or the low of the day, as well as the open. There's a reason why there's a low of the day, there's a reason why there's a high of the day. And anytime you're trading around the high or the low, you want to be asking, can we go lower if we're at the low, or can we go higher if we're at the high? So you can see here, let me just get the crosshairs going on here. So, this yellow line here, 131.19 is the opening price. 20 has been the high since the reopen. And this yellow line, you can see this morning as we're coming down, making new lows. Now, in the order flow, there's a few things I like to look for when we're trading at the lows or at the highs. And I'll be talking about this as we're coming into this low here. There's two, in my opinion, there were two opportunities here in the morning to get long. Okay, the first one started going up, and then it petered out. Second one, you had this nice rally back up towards the high of the day. And I have always talked about this. When I first released the Orderflows Trader software in 2015, two of the tools that we had were tools that highlighted divergence and order flows ratios. Now, a divergence in the order flow is a new or equal high or a new equal low. Well, first I'll start with a bullish divergence. So it'd be a new or equal low with positive delta on a green candle, right? As you can see right here, right? We have a new or equal low. It's equal here. And we have positive delta. So what that's telling you is buying came into the market at the low. That's a potential opportunity to be getting long. Now, the opposite would be true at a high. A bearish order flow delta divergence would be a new or equal high with negative delta and price action, a red candle indicating the market is starting to potentially sell off. Now, the other part of it is the order flows ratios, right? And you can see here this blue number, 0.14. You got another one here, 59. Now, the ratios, what it reads is it reads the order flow appearing in the bottom of the bar of a green candle or the top of a red bar. And really what I'm more interested in is not the actual ratio itself, because remember, it's a ratio. It's not a number that's calculated and then you come up with an equation. It's just a ratio. It's reading the ratio of the order flow towards the bottom of a green candle or towards the top. And if it is blue, then it means that's within a certain parameter that's indicating either price defense or price rejection. If it's black, right, you can see black here, 12.77, 2.35, 13.4, 2.9. That's just your normal order flow, right? Markets exist to facilitate trade, to transfer risk from one party to another. So it's not uncommon, or actually it's more common rather, and I would say uncommon. It's more common to have regular order flow go through. It's more common to have bars with regular order flow going through, nothing really actionable. But when I start seeing, bullish order flow in terms of the ratios indicating price defense that I got down here, or price exhaustion as I have down here, that's actionable, right? It's telling me, hey, you know what? I'm at the low of the day. I have a divergence and I have price rejection coming in, right? I use price rejection and price exhaustion kind of in the same vernacular. Here I have price defense, right? I've got a big bid down here, 241, right? I see price defense coming in at this low, right? You see came down, hit 269, 241, came down, tested it, 122, made a new low. one of my bread and butter trades that I teach traders is, when you have a divergence and a ratio, that's a good sign that, this market potentially can start to take off. This is a bullish divergence and you have bullish order flow, but it didn't. This one, it just went up about 3 ticks and then came right back down, made that new low. You got another signal here. This is the trade that had a nice move up. Now, what's the difference between these two, right? Well, if you're looking at the order flow, remember, it's not that you just have a signal coming in like, oh, this is bullish or this is bearish. You still need that follow through order flow to continue, right? Because remember, it's not like you just find, you could go hide in a cave and think, I'm going to bring my computer in there. I'm going to come out, figure out some way to predict highs or lows. It's not about predicting highs or lows. It's about following the order flow, right? Because if other traders aren't buying after you get long, market's not going to go anywhere, right? If instead, as you have here, right, market starts to go up, but then the buying dries up and then the strong selling comes in, well, you're going to get stopped out, right? What you want to see is after you get long, right, you want to see the positive order flow, right, the continued buying coming in to move that market higher. And there's several ways to determine that in the order flow. Okay, so while having a ratio and divergence is good, it's almost good enough, you still want to follow the order flow after you get into the trade. Because what's happening here in this red bar down is you're starting to see some strong supply come into the market, right? You see, so say you get long off this bar here, right? You got your ratio divergence off the low. It's a good sign, right? I like that. Okay, now do bear in mind, you do have an unfinished auction here, right? You got the 241 on the bid side, the 299, which, if you trade unfinished auctions, that's a sign that potentially the market could come back and close that auction. So you have that sort of hanging over. But again, that's not written in stone that the market has to come back. Markets often do come back, but that's I don't want you not taking a trade just because there's an unfinished auction there, but you have to have that in the back of your mind that, the market could come back to that level. But what you're seeing in here, right, if you're getting long, right, if you're long off this bar here, and this is a bar I like because, market's coming down, you have strong negative delta, then weaker, then positive, right? So the selling is kind of drying up. It went from minus 607 negative delta to minus 114 to minus 70, and then a positive, right? Now I've got positive delta, right? I got that delta divergence. I've got a bullish ratio. And market starts going up to 1 tick higher, 2 ticks higher than this bar, then 3 ticks higher, but then it starts selling off. And as it sells off, you got big supply coming into the market, 597, right? This buying imbalance here. Now, some people are going to say, well, isn't that bullish, right? Because it shows strong buying. Well, in this case, it's actually bearish. And why? Is because the market is starting to tick down and someone is coming in here with supply to absorb whatever buying is taking place, right? They have supply to offer out to the market, right? Market starts trading down. That's your sign that, what? We're probably going to come down and close this auction, right? Market drops down and eventually 1 bar later, this is a 5-minute chart, we do close that auction and you'd have been stopped out. But the sign was in here that supply was coming into the market, not necessarily a positive sign in the order flow, right? It's not something that's convincing you that, hey, you know what, this market could go up. What I would have liked to have seen rather is this 597. Instead of a buying imbalance, I'd like to have seen a selling imbalance come in here, which would indicate that there's supportive buying coming in. Okay, but this is what happened, right? The supply came in, market, you can see market made a new low. It traded down to 25, 24, 23. Started to go back up again, more supply coming in, 1,015 on the offer here. And one of the obvious signs in the order flow that supply is coming into the market is when you see the strongest volumes often appearing on the offer side in red candles, right? So I know that there's still people that they've got some supply to offer out here, 1,015. And market immediately drops back down to 24, sort of comes back up. It's sort of holding this level, right? I mean, first sign of supply came in at 131.01. Second sign came in at 131 even, right? So imagine, you're looking at this market like this right in here. You saw some supply come in here and then sort of coming back up to that level. You still see more supply coming in, okay? what happens next? Market drops down. So I know at 131 even, there's some potential supply there because there just was. I saw it, and even a tick higher at 01. So, this 131 00. Let's just draw a line here, to it's really 01. It's 00 and 01, but I'll draw that line at 02. Okay, so I know that if I'm going to come back up, I got to get through this area of supply if it's still there, or if it's not there, maybe the market can just go higher. So I know I've got supply, right? I know I've got resistance at this area of 00 and 01. Okay, so now I got to watch, what's going on in the market. Well, we came back up, we hit the double O's, and then we dropped back down to a new low, or sorry, an equal low, 130.23. Now the next bar. Now this is where it gets interesting, because again, we have that divergence and we have a bullish ratio. And we trade back up to that area that I had sort of marked in here as resistance based on supply in the order flow. Okay, so I know I got to get past this 00, I got to get past this 01, so I really want to be trading on the other side of 02 for this market to, make a run back up towards these highs up here, or at least the opening price of 19. So, from basically 02, I've got a target up here of around, 18, 19 potentially. And, what's my risk? Well, again, this low, this is kind of a little bit bigger than I like to see. But again, this is a 5-minute chart. But it's shaping up as a potential long, right? So just as I told you earlier that I liked here, I got the ratio and divergence. Here I got the ratio and divergence. But what's a little bit more interesting in here, now I don't have an unfinished auction, right? It's 0 here, okay? And, over here I had that unfinished auction, which was sort of looming over me. And another thing that I like is as we come back down, testing a low or testing a high, I like to see volume decreasing dramatically. 376, let me just take off this low of the day line, so it might be a little bit easier to see because it might be a bit hard to read those numbers with that on there. So let me just remove that and just give it a second here. Remove, click apply. And the reason why I'm removing that just for now is just so it's a little bit easier to read these numbers, right? So you can see the 299, that unfinished auction here. So you see, even though it was 268 to 241, it really wasn't that big of a drop off. But down here it was 376, and then 29, and then 2. So the first time you hit that low, it's 376 traded. Market went up to resistance, came back down. It traded 29. Then over the next bar, it traded 2. So where are my strong sellers? They're not there anymore. Right here, you had 268 the first time, and then 241. There was interest in there, and even went offered at that price. You don't have any unfinished auctions here, so it's not even going offered. And more importantly, there's just not that interest that there was earlier. Okay, so I have that going for it too. So what happens in the next bar? Boom, we finally trade above 02, right? That area of that resistance. Now there was 524 that traded here at 00 on the offer. We got past it, right? We got past the 01 offer where there was that supply earlier, right? Even up here, you see the 272 traded on the offer. Now it's just 127. So remember, right? What was resistance, if you get through it, can now be your support. So now I've got my bullish order flow coming in, right? With the ratio and the divergence and the declining volume. And now I'm above that resistance. I'm trading 06. So now this resistance can potentially become support. And then what happens in the next bar? We trade down into it, down to 01. And it's holding. Next bar, trade down 01, 00. Okay, we're not trading through it. Your resistance, this was your resistance before, is now becoming your support. And it's coming after the bullish order flow is taking place. And then what happens? Market stays above it. Points of control, higher. This is your low. So higher, higher. They're both aligned here. 2 point of controls at the same price level. Then another 2 bars, point of controls at the same price level. But they're higher, higher, right? Which is what you want to see on a market that's starting to move higher. And then boom, another higher point of control. So, the area to be getting long is in here around the O2 area, right? You're already seeing that sign of the bullish order flow, right? Let the market get you in. Just drop a buy stop in here at O2 because you're getting past that resistance to get long. So you're getting long up here at, at O2. Worst case scenario, if all hell breaks loose, you have a stop down here at 22. But ideally, your stop's going to be a little bit tighter just below these buying imbalance, or just around these buying imbalances, or just below what was your resistance. That's now your support. And then stack buying imbalance comes in. So again, you'd be long from O2. It's I don't want to say a quick move, but 5, 10, 15, 20, 25, about 30 minutes, all the way up to 12, right? And you see it gets all the way up to 18, doesn't quite hit 19, and 20 was the high. And then it sort of comes back down, back down to, I know I've got support down here at 1 and double O. Just sort of hangs around this 05 back up to 12. Now, there's an added way you can see it by looking at the value area of the bars, right? I know that value area is a great way to see when a market is balancing, and more importantly, when a market is starting to move out of balancing. And in the Orderflows Trader, you could add the value areas onto your bar. So here, I'll just add them on. I'll enable it because I have it disabled on this chart. But when I add it, it's going to tell me, or rather show me, when a market is balancing or when a market is starting to move away from balancing. And this is where it gets interesting, is because when you have overlapping value areas, right, as you have here, right, these reds are the bearish, are the red candles with their value area. That's why it's colored red. Then the green candles, this is the value area. This is the value area. This is the value area. Is when it's overlapping, you can see this value area overlaps the previous bar, overlaps the previous bar, overlaps the previous bar, overlaps the previous bar, overlaps the previous bar. That's a sign that a market is still balancing. So, even if you're getting long in here off this first low, this first ratio and divergence, you still have the value is overlapping. That's not exactly the greatest sign that you want to see on a market that's starting to move. When you come over here, you got these 4 bars with value areas overlapping, but between this bar here at 855 and the bar at 9, you have a gap in the value, right? Which again, that's bullish, right? This is a way to see gaps in the bars, between bars, right? So all of a sudden, you're forming your value, your balance area, rather, down here between, we'll call it 29 and 24, and all of a sudden we gap out of that area. What do you think that's going to be, right? That's bullish. And you can see the market starts forming a new balance area higher, and it just starts going higher. The value areas start going higher. So, that's a tale of two lows, right? Which one was better? Well, ideally, this one is better. I mean, I would still trade this one here, but as soon as I see the signs in the order flow coming in, like you see here with the supply, that's your sign that this is probably not going to be moving, okay? But this one here, right? You don't have that. You do know I do have that supply here, this area, and I know that if I get through it, it could be off to the races, and we do. We just burst right through it, and we go higher, okay? And the clues, obviously, I didn't even talk about this bar with 5 buying imbalances and these selling imbalances acting as support, but you got the aggressive buying coming in. You gap up in the value, you close well above your previous resistance area, which has now turned into support, and the market is going higher. So, that's how you can put the pieces of order flow together. So I hope you enjoyed this video, and found it useful. Again, be sure to like and subscribe the channel, and I'll talk to you guys soon. Bye-bye.